The investment industry recently came together for the Morningstar Awards, which were hosted on Tuesday evening in Cape Town. Besides awards for each fund category, Morningstar also announced the best small and large investment house overall. The award for the best large manager went to Coronation, while the award for the best small manager went to Southern Charter Wealth Management. Joining us from our Cape Town studio is Peter Kukumur from Coronation, as well as Mark Thompson, the CEO of Southern Charter. Good evening, gentlemen. It's obviously a great feather in the cap, so to speak, to have the award for the best overall investment house. And perhaps if I can talk to Peter first, it's not the first time Coronation have won this award, Peter, so you guys are obviously chuffed to be a recipient for, I think, the fourth time. Is that right?
It's the third consecutive time.
The third consecutive time. Well, I think it's, we were just talking about it on the show the other night and wondering if Coronation had eclipsed your competitors, Alan Gray, as the premier large investment house. Would you agree with that statement now?
I mean, it will always be a tough race. I mean, we've been blessed with a slightly better performance the last few years.
Peter, I speak to Coronation fund managers all the time, and it does sound a bit like a broken record every time I ask them to describe the investment process. Just how much of that valuation-driven long-term approach to investing do you think really brings to the alpha that you're able to generate in the different funds that you've performed in?
And we believe that philosophy is absolutely key. I mean, it's easy when you listen to fund managers to think that there's a lot of platitudes that the industry subscribes to, a lot of hot air that we sprout, rather than admit that we don't really know what's going to happen in the markets next. But we do believe that the fundamental differentiator for what Coronation does is the fact that we're prepared to take a slightly longer term view to valuations than the vast majority of market participants. I mean, when you value companies over 5 years, and most of the market participants are more concerned about what's going to happen this year or next year, we believe that that gives you competitive advantage, and we think the awards bear that out.
Peter, it's often talked about that the problem with investment management at this point is that there's such a short-term focus, such a myopic focus on performance. And Coronation, as a listed company, has the double pressure of having to report to shareholders every 6 months. I'm just intrigued to find out how you've structured the organization such that you can actually look over the long term and avoid some of the pressures, or at least deal with some of the pressures that come with the short-term need to perform, both in the funds and as a listed entity.
I mean, it all starts, with any set of stakeholders, it all starts with appropriate expectations management, ensuring that that both clients and shareholders in the business understand what makes us tick and what we believe we need to make the business work well. What also is massively important for a fund management business is to ensure that your internal incentive models are aligned with that long-term focus. So if we expect our clients to have a long-term orientation in evaluating outcomes, if that's the way that we manage portfolios, that should also be the way in which you reward staff. And we think that we've been able to successfully and consistently establish that culture through shareholders, staff, and client expectations.
Well, that's great. Peter, all the best. I just wanted to now turn my attention a little bit to Mark at Southern Charter Wealth Management. Mark, this is also not the first time you've won an award at the Morningstar Awards, as far as I'm aware. I think for the benefit of viewers, could you just tell us a little bit more about some of the funds and strategies that Southern Charter Wealth Management run?
This is actually the second time we've won this award, and earlier in the month we won 2 awards, Raging Bull Awards, for our balanced and our growth funds. But our process has essentially been, we are top-down managers, we're asset allocators. So our focus is on asset allocation as a major generator of alpha. We have 3 funds, which are defensive, balanced, and growth. It's incredibly simplistic, and we follow Markowitz's models that have been, the numbers have been crunched, and I jokingly say 2 or 3 in 2007, 2008, when I wasn't sure what was going on with the numbers, everybody thought it was a bit humorous and funny, and I thought, well, I have to protect my clients' money. How do I do that? Well, let's apply the Markowitz principles with the strategic asset allocation models. And during the last 5 years, the challenge has really been to keep the fund managers actually on the models, because people often thought, or fund managers often thought, they knew things better than the market. So we do tactical asset allocation on top of the strategic asset allocation, and it's actually delivered incredibly consistent return on a risk-adjusted basis. I mean, our clients are absolutely delighted.
I'm sure.
By absolute contrast to Coronation, we are top-down and they are bottom-up. And I guess some of the fund managers, we use actually Coronation's income fund in our funds. But most of the managers that we selected had a global view. So we could see 2007, 2008, the macro picture was going to play out quite hugely in South Africa. We didn't realize at that time, to the extent that it has played out, with the compression of the yields and people chasing both our bonds and our high yield dividend stocks. That actually, and we were just positioned correctly. The second thing that we did was we chose, I mean, the first line of defense was to make sure the strategic asset allocation was right. The second was then to choose value fund managers which we believed had potential. 2007, 2008, we actually changed from Investec to Foot. And as the market was crashing, we thought, well, we'd get more protection, and we've had an unbelievable return. So our job is really making sure that the asset allocation is correct and choosing the correct fund manager to play in each asset class.
Mark, just to come into that asset allocation question, and we talk about the offshore exposure. You know, I've spoken to many investment managers who from South Africa who are just not interested in what's going on in the fixed income space offshore. Is there still a case to be made for keeping the fixed income component in an offshore portfolio at this point, or how are you managing the risks and the challenges in that sector?
We realize that in our models, the historic models tell you should hold in a balanced portfolio about 8% in offshore bonds, but we're actually down to 1%. I think that's you're in a real danger zone being in offshore bonds. I think the markets, our view is that they have turned. Things are looking better than they were, and we're not facing down a financial Armageddon. I mean, I'd be very surprised if they could go much further than what they are now. In fact, the 10-year US Treasury bond as an indicator is up at 1.88. We watch that very carefully as a sort of a long-term view of where things might end up. And I think we're on the positive side rather than the negative side. I think bonds have had an incredible run for the last 20 years. And it's now going to be the position of the timing of this sort of almost great unwind where people have had anything that's related to fixed interest that has had a huge advantage might have a problem going forward.
Peter, just coming back to you there with respect to the Coronation offering, I know you've got a very strong portfolio of funds locally which are allowed to invest offshore. You've also gone the route of actually developing a specific emerging markets fund which Gavin Jabir runs, and you've also you've added some funds with an African context there. Does the house have any plans to sort of broaden that offering, considering that South Africans have more money to invest offshore than they've ever had before?
Global is the key growth part in the business. I know in the previous part of the program you spoke about global equity specifically being the preferred asset class. We would definitely concur with that view. And it is the part of the business where we are investing most resources at the moment. I mean, we have recently announced that Senior Portfolio Manager Louis Stassen towards the end of the year will not be involved in any South African responsibilities anymore, specifically to strengthen our developed market equity franchise. We've hired a few analysts in that area earlier this year, so certainly an area that we will continue to invest in, both from the perspective that we see the best opportunities there for clients from a valuation perspective at the moment, also from a business point of view. I mean, those really are the areas we think we can see most significant growth.
Just in terms of that, are those analysts and those fund managers going to be based in Cape Town, or are you planning on opening offices in other capitals around the world?
I mean, we don't think there's any right or wrong model. For the moment, we believe that it's more appropriate to concentrate our investment capacity in our Cape Town office. There are massive advantages to that approach, especially we think at this stage in our life cycle, for the simple reason that you get significant cross-pollination between your different investment teams. If you're a global emerging markets analyst, for example, looking at a telco stock, it makes a lot more sense to be able to compare your valuation model with an analyst looking at telco stocks in developed markets, I mean, because there's significant overlap. And we find that the depth that creates in investment debates, I mean, is probably worth more than the potential disadvantages of distance to the management teams and the issuers.
Besides the, besides using the base, the South African base, though, has Coronation been investing into making some of its funds available in other parts of the world, so that investors, for instance, either in the developed world like the UK or in other emerging markets, can actually access Coronation funds?
I mean, it's certainly part of our plans. We, in the early stages of internationalizing the Coronation client base, our focus at the moment is primarily on the large or the ultra-large end of the institutional investor market. So primarily pension funds, university endowments, ultra-high net worth family offices. So with a focus on Europe, the UK, and to a lesser extent the US and the Middle East.
I just wanted to ask you, in terms of, you've had the changeover of CEO, what's the difference? What would you say the biggest difference is between being a publicly listed asset manager and one that's perhaps privately owned?
I mean, fundamentally, as a listed company, I mean, you have a slightly more complex balancing act between the interest of different stakeholders, because you have a set of public shareholders that are typically portfolio investors that come and go, which you don't obviously have as a private company. So a privately owned shareholder would have the benefit of being to operate more independently from the or not independently, but to be more focused and more sort of under the radar screen, whereas a listed company obviously a bit more exposed. I think one of the key benefits that you have as a listed company is that price discovery, that line of sight, which makes it much easier to attract high quality staff and incentivize them to remain in the business.
I just wanted to ask one other question before I turn my attention back to Mark, and that's around the alternative investments. We've had John Oliphant on the show talking about the increased role he sees for private equity within the government employee pension funds. We recently did a private hedge fund show, and we saw in the Symmetry results certainly a couple more Coronation funds there. Is that another direction that the House is kind of taking us to maybe not go into alternative investments in a massive way at the moment, but certainly lay the foundation for the use of them going forward?
We'll continue to evaluate the options and the opportunities that are available. As far as alternatives and specifically the hedge fund component are concerned, I mean, I think our interest is really more in figuring out how you can apply alternative investment techniques to the benefit of your existing investors in multi-asset portfolios, rather than to build separate loan-standing businesses focused purely on exploiting opportunities in those asset classes.
Okay, Mark, I just wanted to ask you, as a small investment manager, you're obviously top-down. What are the types of things we've heard Peter talk about, the long-term investment strategy? What are some of the things that you look for in an investment manager before you include them in one of your portfolios?
We actually, it's a very interesting point. The sort of key criteria is we look at the individual manager and his ability to move between the top-down and the stock picking role. We find sometimes with incredibly bright guys, they get fixated on believing their own story and they won't look left or right. And after you've visited 5 or 6 managers, you get a fair idea of what the consensus is, and you may find somebody down the completely wrong track. So its ability to have an open mind, follow a really solid process, and probably amongst the biggest issues being consistent. You don't really want people to take excessive risk with your money, and you want them to give a consistent risk-adjusted return. That's what we're looking for.
And besides just consistent theme, do you ask the question around how much of an investment manager has his own wealth invested in the funds he invests in? Is that alignment of interests quite important?
It's Probably not as important, but where it might come in is in terms of the size of the funds. I know these are issues. We held Allan Gray 5 years ago, and we held Coronation's funds 5 years ago, and what we've been looking for is smaller funds, and by definition, the smaller funds tend to have closer management involvement and probably larger investments from those individual managers. I think when you get a bigger corporate type operation, the decision making might get more diluted. Whereas that's quite a core issue. We definitely don't want decisions made by committees. We're looking for individuals who are in a growth phase, who have an interest and a focus in managing that money as if it was their own. And I'm pretty sure we don't actually ask how much they've got involved, but there's an assumption that they would be fully involved in their own funds.